Good morning, students. Namaskar, Suprabhat, Vadakkam, Kem Cho. I hope you all are good and studying very hard for your future, of course. So I am C. Ankit Sharma, your income tax faculty, and we are going to discuss PGBP provisions. In the last session, we discussed the PGBP basic provision. I can say those were the theoretical provisions, or we can say foundation provision for PGBP head. But technically, PGBP head is a pure numerical topic. So the foundation, the introduction of PGBP, the basic provision is to just make you understand that what is exactly this PGBP head is all about. In the last session, we discussed the meaning of business and profession. Then we discuss profits, meaning of profit for PGBP head, under which we discuss cash or kind, legality of income, etc. provision. And after that, section 28, that was a charging section of PGBP, which says any income directly or indirectly connected to the business will fall under this head. That was a very interesting provision also, which says whether you earn any income to carry on the business or for not carrying on any business, still it will form part of your PGBP income. We discussed that, of course, and all the provision related to that we already discussed it. Okay. So after that, we also discussed section 29, and before that, speculation income. What is speculative business? What were non-speculative business? And then regarding the section 29, which says about the deduction part, in which we discussed building. In respect of building, we can claim repairs, then rates and taxes, then depreciation if you are owner, or rent if you are not an owner. And then exactly same regarding the plant and machinery and furniture. And the last topic we discussed was depreciation provision. And we were on additional depreciation concept. So a very good morning to all of you again, as you also send good morning wishes to Ms. Diksha, Komal, Singh, Mr. Ishan, Ms. Bhumika, Darshan, Sankaran, Sushil Kumar. To all of you from my side, a very good morning. Okay. Before starting today's topic, I have told you already that we will discussing MCQs before starting of our lecture. But before starting the lecture, as I always do, please again, I already shared this screen with you in last session, and I also want to share this screen with you today also. Please follow these guidelines for better understanding of the lecture. Notes are based on study material issued by ICAI. Provisions are for assessment year 23-24. All queries will be answered almost after 30 or 40 minutes of lecture. Please focus during lecture and ask queries related to topic only. Please try to take live classes, of course. These classes are available on YouTube. You can watch it later also, but I prefer that you should watch these classes live. Kindly download notes before lecture for better understanding. I have uploaded some more notes yesterday night also. Initially, I uploaded assignment 1 for PGBP. That was from page number 1 to 46, and yesterday I uploaded from page number 47 till 83. Some students was asking me again and again, sir, that notes are not on portal. That is wrong. Notes were always on portal. Let me tell you how to find the notes. If some of you don't know and how to download the notes, then please listen carefully. You need to go to the ICAI site, ici.org, and go to the BOS knowledge portal. In that knowledge portal, you should log in yourself with your CRO number and your date of birth. After login, you will find there is one section in which there are assignments and notes has been written. Click on that section and then click the your session faculty name. There are a lot of faculties. You need to search your session faculty name. Like for my notes, you have to find CA Ankit Sharma. And as you're going to click C. Ankit Sharma, you will find the notes uploaded by me easily. I have tried this. That's why I'm telling you right now. Okay. So nobody need to ask me that, sir, there is no notes. Notes are there. I have already checked it. Okay. So this is journal provision. We'll take MCQ test and all your queries. If somebody needs to ask me any query in Hindi, you can ask me. I will answer in Hindi only. Okay. Next, of course, a quotation. Today's quotation. The quotation says there is no future in any job, but the future lies in the man or woman who holds the job. So technically, there is no future in any job. All jobs are technically provide the same opportunity to everyone, but it's you who will technically depends that how you explore your job. So the basic idea is this, that future lies in the person who holds the job. Like there are chartered accountants, those are earning 1 lakh rupees per month, and there are chartered accountants, those are earning 1 lakh rupees per day also. There are doctors, those are earning 1 lakh rupees per hour also. So the profession is same for everyone. The degree, the profession qualification is same for everyone. It depends upon you that how you explore that profession. That's technically matter for in every case. So please remember, the course is same for everyone. The degree is same for everyone, but every person has his exploration limit. How you explore the profession, that's matter. So this is one of my favorite quotation, and when I start doing CA, I read it somewhere, and I really believe in that quotation from the bottom of my heart that yes, there is no future in technically any job, but the future lies in you. You are the future technically. Okay. So now moving on to the MCQ sheet. First of all, I'll take this MCQ and I need all of you to be the part of this MCQ. So I can see that how much sincere you are for your studies. So I'll ask a question and you need to answer. I'll give you 10 or 15 seconds. All are optional MCQs. So you have to read the question very carefully. This is the most important part of an MCQ, of any MCQ, that you should read the question very carefully. Okay. So this is question number 1. Are you all ready to answer? Let me see how many of you are ready to give the answer. So most of the MCQs are theoretical, but there are some numerical topic also. So you should have your pen, one paper, pen, and a calculator with you. Whenever there are an MCQ test or any test, you should have your weapon with you. And these weapons are, of course, your pen, your paper, and the calculator. So I'm going to ask first MCQ. Let me see who are ready to give me the answer. Who are ready to be a chartered accountant, who are really sincere and disciplined for your future. So are you ready, students? I'm waiting for your response. Please be ready for the MCQs. That will really help me also to feel that yes, these students are really sincere for their future and studies. Okay, so I've got the response. Very well done. Noor, Ishan, Kushi, Diksha, Darshan, all you are there. So let's get started. This is first MCQ. Please read it carefully and give me the answer. These are easy, of course, because we are on just finished the introduction part of PGP. But as soon as we will complete our PGBP numerical topic, the next MCQs, the other day MCQs are going to be quite difficult. But these are very easy and I want everyone should answer correct. So you should read it and send me the answer. Kindly send me the answer with question number. Send me the answer like question number 1 and your option. Okay. Okay, everybody is ready. Well done. So first answer has been given by Mr. Akshay Kumar. Oh, Akshay Kumar, Khiladi. Very nice. So which of the following is not treated as business? That was the question. And Mr. Akshay Kumar sent option D. And of course, the correct answer is D, because doctor running his clinic is a technically profession, not a business. So after Akshay Kumar, let me see who are going to give me the correct answer. Yes, Miss Kanvitha also can give me the correct answer. Well done, well done. Noor, D, correct. Sankaran, D, very well done. Khushi is saying C. Why C? You should read the definition of business, what we discussed in our last lecture, Khushi, and in which we have discussed that any adventure in the nature of trade, trade resemble to trading, and of course, trading is a business activity. So C is not the correct answer, Sonali and Khushi and Diksha. The correct answer is D. I guess you got it. Okay. Now, MCQ number 2. Which of the followings treated as profits for PGBP? Read it carefully and give me the answer. Which of the following treated as profit for business? Let's see. Vaishali is saying C of question 1 answer, and I've explained you, Vaishali. It's not C, it's D. Because trade or commerce forms part of business, but doctor running is a clinic, it's a technically profession. Doctor running hospital, I'm not saying. Doctor running his clinic, okay? Okay, so question number 2, answer sent by Darshan is D. Its correct answer is D, of course. Okay, Prasanna is D again, correct answer. D is also correct answer. Noor, very well done. Khushi, D. Kavita, D. Well done. Sushil, D. Okay, then Mr. Kabilana is D. Okay, Miss Sarvase Bhumika is saying A. No, A is a wrong answer. We discussed the definition of profit, that profit can be in cash or kind, does not matter. Okay. So most of you have sent me the answer is correct. That is D. Rashmi is saying B. No, Rashmi, you are wrong. Profits from PGBP voluntarily listed by a CA. We discussed this point also in the last class, of course. Okay. So if you did not watch the last lecture, please go through the last lecture and you will understand what we are talking about. Okay. So if it's possible, kindly send me your answer and the place from you belong, because it really feels very good when I see somebody saying sending answer from Andhra Pradesh, somebody sending from Mumbai, Gujarat, etc. It feels so good. So write down the question number, your MCQ answer. If it's possible, kindly send me the place you belong. Next question, question number 3. Which of the following conditions are to be fulfilled for charging an income under the head profit and gains from business and profession? To claim or to charge any income under PGBP head, which conditions should be fulfilled? This is the question. Let me see who are going to send me the answer. Mrs. Latha D, kindly send me the answer. Latha is asking, what about option C? Option C in question number 2 was income from illegal business. Mrs. Latha, we have discussed in last class, there is no legality issue. Even if you are earning from income from illegal business, that will also fall under PGBP head. You can watch the last session, the last class, in which we have discussed about it, and even this point is in the part of your basic provision, also in the definition of income, I guess, the concept of income. So question number 3, let me see who are going to give the correct answer. Okay, Kavita is from Hisar, but from Nepal. Very nice to hear this, that you are from Nepal, very beautiful country, of course. So correct answer is again D. Well done. Darshan is saying D. That is from Tamil Nadu. Very nice, Darshan. Anisha is saying D. Correct. Ishan is D. Delhi. Well done, Mr. Delhi. Then Kabilana 3D. Sushil Kumar is saying D. Correct answer is of course D, because there should be profit and gains. Business or profession should be carried on by the assessee. Business or profession should be carried on any time. So all these conditions will be fulfilled to charge any income under PGBP. Moving on to question number 4. Okay, Bhumika is from Delhi. D is Sankaran is from Nellore. Fine. Rama is Hyderabad. Somebody is from Mumbai. Farah Sayed is from Mumbai also. Good. Komal is okay, D. Nasik is Diksha. Then Singh Rajiv Kumar is from Gujarat. Tamil Nadu, all of the from Tamil Nadu. Noor, okay. Kriti Chennai from Tanvita. Kushi is from Rajasthan. Kota, well done. Question number 4. Please read it carefully and answer. Under the head profit and gain of business or profession, the method of accounting that should be followed by an SSE is, which is the correct answer? You need to give me the correct answer as soon as possible. Sushil Kumar Barik is asking, illegal business means any kidnapping business or any kind of these activity that is also going to be taxable if it is irregular in nature, and it is not exempt. They are going to be taxable as business income. Sarvesh is from Pune, Maharashtra, beautiful city Pune, of course. Kriti is from Haryana, again very nice. Okay, from Delhi, Krishna. Vaishali is from Panchkula. Kriti is Haryana, Sonipat. Okay. Kerala, Mr. Akshay Kumar. Nice to hear this. Question number 4. Hybrid system means both system in the same year. That is not possible. So hybrid means cash and mercantile both in the same business. That is called hybrid system. Okay. Who was asking? Somebody was asking what is hybrid system. And, option C, Gayatri was asking. Okay, the Gayatri clear? Okay. Anisha from Kolkata. Yes, I have been in Kolkata in April for my statutory audit. Beautiful place. Okay, so 4th correct answer is D. It's not C. Cash or mercantile regularly employed only. Fine. So you can check it out in the last section, last video. We have discussed that under business head, you can maintain your books of accounts on cash system or mercantile system regularly employed by assess. Okay. So now moving on, question number 5. Question 5. Under the Income Tax Act 1961, notional profit from speculative business is. It's a very good question. Please read it carefully and then answer only. I want to see who can give the correct answer for question number 5 because this is quite different question from other. Other were very, very, very easy, I guess. And now this is quite different kind of question. You have to understand the question first, okay? I'm not going to give any hint. You have to understand the question. You should know the meaning of notional profit. If you know the meaning of notional profit, then you might be able to solve this question. Otherwise, you will going to solve it wrong. Okay, question number 5. Sushil Kumar is saying D. Okay. So you think because question number 1, 2, 3, 4 answer was D. So question number 5 answer is also going to be D. D is the wrong answer. Let me tell you. Okay. Then Keshav is saying A. I don't know it's correct or not. I will tell you. Let's see the other answer. Akshay Kumar is saying B. Rama is saying A. So D is the wrong answer, that I can assure you. So the right answer will be A, B, or C. So you have to tell, and you can only understand this question if you know the meaning of notional profit. Okay. Okay. Somebody is saying, Latha is saying C. Gayatri is saying C. Komal is saying D. Sumesh is saying, what is IFOS? Who is asking? Suravase. Income from other source. It's a head of income. The last head of income, I'm going to teach you again. Don't worry. PGBP, then capital gain, and the last topic will be income from other source. The short form of it. Diksha is saying C, then somebody is saying A, Darshan is saying B, Prasanna is saying B. Okay. So the correct answer is B. That is not taxable. Notional profit means assumed, deemed, which technically not arise or not received yet. For example, if I buy some shares for rupees 100 right now, after opening of stock exchange, I bought 100 shares for rupees 500 each. Okay. And at the afternoon, the price gone up 600 rupees each, but I did not sell it yet. So that 100 rupees profit is deemed. If I'm going to sell it, I'm going to earn it. But till today, I am not going to sell it. till 3 afternoon, I am not going to sell it. So the 100 rupees profit, I bought it 500 rupees, and now the price in the market at the time of afternoon is 600. So my notional profit, that means assumed profit, is only 100. That is not my real income. The real income is going to be taxable under PGBP. If I sell them at 600 rupees price, then 100 rupees can be my speculative income, etc. But because it just a price increased, but technically that is not due, not received by me, so that cannot be treated as income. For example, if I purchase some share at 500 rupees per share per price, and after 1 year, the price is 900 rupees per share, but I did not sell it still. Or you can say on 31st March 2024, the price is 900 rupees per share, but still because I did not sold it, so that is cannot be treated as my income. So the notional profit from speculation business cannot be treated as your income. If you purchase some material, for example, you purchase shoes, you are in a trading business of shoes. You purchase stock of shoes and the price is 400 rupees per pair. The price is 400 rupees per pair. So when the profit will arise? When we are going to sell it. If we did not sell it and the stock is with me, but the market price goes up like 650 rupees per pair, still it cannot be treated. That 250 rupees of difference cannot be treated as my income until I am going to sell it. Okay. So notional profit, that means assume, that is deemed, which is not arise, not accrue, not earn, not received. That cannot be treated as your income. The concept of notional rent is income from house property, but not in PGB. I hope it's clear. It's a very good question. Next. Transaction in which a contract for purchase or sale of any commodity, including stocks and share, is physically, periodically, or ultimately settled otherwise than by the actual delivery or transfer of the commodity or scrip, is known as wagering transaction, speculative, deemed speculative, or none. This is also a good question. Read it and answer me. Question number 6 answer I'm waiting. Do it fast. We need to cover a lot of syllabus, so I need you to please send me answer as soon as possible. Question number 6. Technically, this is the definition of what? Wagering, speculative, deemed speculative, or none. We have discussed it the last session. Okay. The correct answer is P, and that is sent by Noor, Bhumika, Kavita, Wi-Fi from Wi-Fi. Well done. So that is question number 6. Correct. The correct answer is speculative transaction. Moving on to next 7. Ex-manager of XYZ Limited since 2004 was terminated by the company on 1st August 2022 by paying a compensation of 20 lakhs. Compensation is capital receipt, not chargeable to tax, chargeable under capital gain, income from other source, or charging on section 28. Okay, question number 6, a lot of answer. Correct answer has been sent. Varsha is saying C for question number 6. That's a wrong answer. The correct answer is B. It's a simple definition of speculative business. We have discussed it a lot of time in the last session. So that's a speculative business, a very simple definition. The correct answer of 6 was C. Now the question number 7 in front of you. Oh, sorry, B. The correct answer now. Give me the correct answer for question number 7 now. Correct. Any compensation received on termination by a person who substantially or managing the whole of the affair of a company will be taxable under PGBP section 28. Next, HSK and LLP had taken Keyman insurance policy on the life of its managing partner. The policy got matured on 13 September 22 and the amount of 75 lakh was paid by the insurers to the managing partner. The amount so received on maturity is, you need to tell me that the Keyman insurance policy amount received is going to be fully exempted, 50% exempted, taxable, or none. Lot of students giving me the correct answer of question number 7. Well done. You are doing really good. You are on the correct path to becoming a chartered accountant. Okay. Well done. So now question number 8 in front of you. That's also very simple. The correct answer is C. Any amount received for key man insurance policy on maturity is full taxable. Ninth is very important. Which of the following conditions should be fulfilled for claiming depreciation section 32? Fulfilled for की spelling गलत है, so it's FR, it's not FRO, it's FOR of course. So to claim depreciation under section 32, which condition should be fulfilled? A, B, C, or D? You are actually giving me the right answer. Most of you are actually giving me the right answer, and this is really good to see that. I'm really, really happy to see that. So now question number 9, correct answer is D. Well done, Darshan. Well done, Keshav. Well done, Sonali. Well done, Bhumika and Anisha. Correct answer. All conditions should be satisfied. So I believe that you are technically reading the notes I have provided, the concept we discussed in the last session. So all of you who are technically take the last session carefully and sincerely and gone through the provision I uploaded, I believe you are understanding these MCQs. Okay. 10th, if the plant and machinery is used for less than 180 days in the year of acquisition, then at what rate the depreciation on that asset should be provided under section 32? Question number 10, we discussed that on asset, when depreciation rate will be 0, when it will be 50% of normal rate, and when it will be full DAP rate of depreciation. So as per those provision, you have to give me the correct answer of question number 10. Question number 9, correct answer. Para has been given. Very good. Vaishali also correct. Arun also get. Tanishka, Kushi, Noor, Abhay, Kabilan, Kavita, Ramas, Ishan, Varsha, Diksha. Correct. All you have given the correct answer of question number 9. Now the question number 10 is in front of you. Yes, the correct answer is A. 50% of your normal rate. So plant and machinery is having 15% of rate, and the 50% of 15% is 7.5%. We did not discuss the plant and machinery rate, but I believe that you must know this much, that the plant and machinery is having 15% of rate. Okay. So the correct answer is A. A lot of students have been giving me the correct answer. Very well done. Very well done. Everybody is giving the correct answer except Tanishka till now. It's not D. It's 15% is the rate for plant and machinery. And because we used that asset for less than 180 days in the previous year, so the rate will be half of the 15%, and that will be 7.5%. Okay. Where that 15% came today, we are going to discuss. These were in the notes also, and it's a general rate, of course. Correct answer is not B, Rajiv Kumar. Okay, it's A. Now question moving on to the rest question like 11, 12, 13. We are short of time. So now I'm going to discuss the assignment with you. And if we have time, we will discuss these MCQ number 11, 12, and 13 later in this class or at the end of this class. Okay. And I will upload these MCQ with answer on the portal also. You can download it after the class. So moving on to the notes now. Just a second. This is our assignment number 2 for PGBP, but before that, we need to complete our old assignment also. There was some provision which has been left to discuss, and we are going to discuss those provisions before moving on to our new provisions. Okay. Correct. So, this was our first assignment in which we discuss about the business and profession difference, then the meaning of profit in our last session, in which profit in cash or kind, capital receipt, voluntary receipt, etc., then method of accounting. After that, income chargeable under section this head, that is charging section, we discuss. After that, we discussed about the concept of speculative income or non-speculative income. I have also shared the summary with you with example. Then how to compute PGBP income. I also discussed a very important topic in last session. Then that about the format of PGBP. That's not in my notes. So if any one of you joined today's session only and did not take the last session, it's my humble request to all of you. Please take the last session in which I discussed how to compute, how to calculate that net profit for your examination. And that's a very important thing. If you did not take that lecture or that part of lecture, it will be really difficult for you to understand why we are discussing these topics. So please, it's a request. Those who did not take the last lecture, please at least go to that video and see that part in which we discuss how to compute net profit for income tax purposes. Okay. So section 29 regarding the expenses part, and a section 30 we discuss about the building, what we can claim regarding a building. Then for plant and machinery, and we were on depreciation concept, in which depreciation, additional depreciation, depreciation allowance, and terminal depreciation we are going to discuss. We also discussed about the depreciation concept, and we were on the additional depreciation concept. So from here, we are start today's episode. Okay, like that was a recap and MCQs, and now the today's episode for all of you. So be with me, enjoy the study. I already told you that do not take burden, just enjoy the study. Just feel like this, that yes, today we are going to learn something new, like what is the additional depreciation? We are going to know this thing today. So additional word, it's a general word, and it says that something extra. So we are talking about some extra depreciation. And it says that government technically want to encourage or promote manufacturing units. So this is technically available only for manufacturing unit and for power generating units. This additional depreciation concept does not applicable for trading business, any profession, etc. Those can claim only normal depreciation. But additional depreciation is an addition to the normal depreciation, but you have to fulfill certain condition to claim this depreciation. Additional depreciation on only plant and machinery. Only plant and machinery acquired by an industrial undertaking. Industrial mean manufacturing. Additional depreciation is allowed on any new machinery or plant. The important thing is also new plant and machinery. Other than ships and aircraft. Ships and aircraft generally fall in the definition of plant and machinery under income tax. But you cannot claim additional depreciation on ships and aircraft. You can claim normal depreciation, but cannot claim additional depreciation because there is a reason. Generally, we will see that in case of additional depreciation, only those plant and machinery, or we can say those new plant and machineries are included, which are in the factory, and used directly, indirectly for the purpose of manufacturing. Because ships and aircraft are for transport purpose, not generally utilized within the factory for manufacturing purpose. So that's why it has been excluded. We have the definition which will explain you those assets, those are eligible for additional depreciation and those are not eligible. So just stay. Acquired and installed after the certain date, that date is not relevant for us, of course, by an assessee engaged in the business of manufacture or production of any article or thing, or in the business of generation, transmission, or distribution of power. So it is provided for any manufacturing unit or those units, those are in the generation, transmission, or distribution of power, and it having an extra rate of 20% of the actual cost of such machinery or plant. The additional DAP is 20%. For example, if there is any plant and machinery on which depreciation rate is 15%, normal DAP rate, then you can claim 15% is normal DAP and 20% is additional DAP. So total 35% you can claim as a depreciation inclusive of additional depreciation. And if it is used for less than 180 days, then you are going to claim 7.5% as normal depreciation and 10% as additional depreciation. So if machinery is used for less than 180 days, then we know that 50% of 50% of normal depreciation is going to apply. And that 50% is for both normal DAP as well as additional DAP. So additional DAP at 10%, that is 50% of additional DAP rate of 20 to be allowed where the plant and machinery is put to use for less than 180 days during the previous year in which such asset is used. But there is a very good concept. Generally, additional DAP can be claimed. Let me show you with the help of an example. Good morning again. Okay. So generally, the concept says that you can claim additional depreciation only for 1 year. In the year you purchase and put to use. For example, you purchased a new plant and machinery on 10th April 2022, but not put to use. So in this year, you cannot claim normal DAP that we have discussed, and you cannot claim even additional DAP because purchase and put to use both must be in the same year. Now, this asset has been put to use in 10th April 2023. Now you can claim normal depreciation in this year, but you cannot claim additional depreciation in this year also. That means additional depreciation will lapse. Why it will lapse? Because the provision says that purchase and put to use should be in same year for claiming additional depreciation. You can claim normal depreciation in the year of put to use, but to claim additional depreciation, the purchase and put to use should be in the same year. So because this year it has been purchased but not put to use, so additional DAP cannot claim. And this year it's put to use, but it has not been purchased in this year because the purchase year was last year 22-23 and put to use year is 23-24. So we cannot claim additional DAP in even 22-23 or 23-24 in this example. Now, one more interesting thing about the additional DAP. As I said, additional DAP can claim only in 1 year, and that year should be the year in which asset is purchased and put to you. Now, for example, you purchased an asset on 10th April 2022 for rupees 10 lakh and put to use on 1st November 2022. So now you purchase the asset and put to use also in the same year. The depreciation rate is 15%. So now how we can claim depreciation? Because asset is put to use for less than 180 days. So if asset is put to use for less than 180 days, that means we can claim half rate of normal depreciation, that will be 7.5%, and half of additional depreciation, that will be 10%, because additional dep rate is 20%. Clear? So if I'll talk about the cost of the asset is 10 lakh and normal depreciation will be 7.5%. That means 75,000. And additional dep will be 10%. That is 1 lakh. Now, due to this word that additional dep can claim in only 1 year, the remaining 10% asset was eligible for 20% additional dep, but because it is used for less than 180 days, so additional dep can also claim 50%. And this provision says only additional dep can claim in 1 year, and that is assessment year 23-24. We claim only half of the additional dep. So in next assessment year, that means 24-25, you cannot claim additional depreciation which was remaining, that was 10%. Earlier it was this problem. So assessee was technically feeling some hardship that I was eligible for 20% additional dep, but as I put to use that asset for less than 180 days, so I only eligible to take 10% in this year. And because the provision says that you can claim additional dep only in 1 year, so I cannot claim balance 10% in my next year. So the amendment came, and now the provision says that if additional dep can be claimed 50% due to asset is put to use for less than 180 days, then the balance 10% can be claimed in the next year. So next year, what will happen? Assessment year 24-25, opening WDV, after deducting these two, 1,75,000. That means my opening WDV will be 8,25,000. So technically, what will happen if we charge depreciation as per the provision? Now my 8,25,000 will be my opening WDV for next year. And what will happen next year? Next year, normal depreciation will be 15% of this value, and an additional dep will be 10%, not for this value. The remaining value that was 1 lakh rupees, which have been claimed last year. So this is a very welcome step, very welcome amendment, which is made by a department that additional dep, if claimed less due to put to use less than 180 days, that is 50% of normal additional rate depreciation, the balance can be claimed in the next year. This is the provision. It says additional depreciation, that is 10%, further the balance additional depreciation 10%, that is remaining on new plant and machinery or machinery acquired and used for less than 180 days, which has not been allowed in the year of acquisition and installation of such plant and machinery, shall be allowed in the immediately succeeding previous year. So only in this condition, additional dep can be claimed in 2 years. Otherwise, all additional dep should be claimed in only the 1 year. Which year? In which the asset is purchased and put to use. There are some machinery, those are not qualifying. On these machinery, you cannot claim additional dep. Any machinery or plant before its installation by the assessee was used within or outside India. So the provision says there will be a new plant and machinery. So if any machine has been used within or outside India already, and you purchased it now, so that we are talking about the second-hand machine. So if there is a second-hand machine that is not eligible for additional depreciation, second-hand machineries are excluded. Any machinery or plant installed in office, because I have told you that we are talking about only those plant and machinery which are used in factory for manufacturing purpose. Any other place like office, accommodation, a guest house, those machines cannot be eligible. So these are not eligible second-hand, and these are office, etc. utilization, no. Office appliances again, or road transport vehicle, those are also not eligible. Any machinery or plant, the whole or part of the actual cost of which is allowed. There are certain machineries, there are certain business in which the whole amount of the whole cost of the assets are allowed as deduction. We will read it under section 3580. In the year of purchase, in the year of commencement of business, you can claim the whole amount as deduction. So if there is any asset, if there is any plant and machinery who fulfill all above three conditions, but the actual cost, the cost of that asset has already been allowed as deduction, 100%. On that case, you cannot claim additional depreciation. Like under section 3580, there are some specified business. We will be discussing it today, of course. And you purchased a new plant and machinery in that, 10 lakh rupees. Under section 3580, 100% deduction allowed. So that means 100% allowed as deduction, not depreciation as deduction. So the value is nil. In these kind of plant and machinery on which deduction is available 100%, you cannot claim normal depreciation, you cannot claim even additional depreciation. Okay. So any machinery or plant, the whole or any of the actual cost of which is allowed as deduction in computing the income chargeable under any head, profit and gain of business or profession of any one previous year. I made the summary. I am trying to make summary of some numerical topics so you can understand. We are discussing the provision and this is a summary which will help you to technically understand the provision easily. So it's a summary for additional depreciation. Please go through it and it's very easy. You'll really feel that it's a extract of the main provision. Okay, go for it. It's same. Ships and aircrafts are excluded. Any plant and machinery previously used, any installed in office, road transport vehicle, and any plant and machinery on which depreciation or deduction 100% allowed. Additional DAP is allowed only in 1 year in which the eligible asset is purchased and installed. That means purchase and put to use, both. Printing press, plant and machineries are also included for the purpose of additional depreciation. You can read it. Okay, I'll take the queries. Don't worry, I'll take the queries after this. And now the next topic is terminal depreciation. Terminal depreciation and balancing charge also. We are discussing terminal depreciation and after some time, balancing charge will also be there. In case of power generating undertaking, this is only applicable in case of power generating units. In case of power generating units, we do not claim normal depreciation. We claim terminal depreciation also. In case of terminal depreciation, what it says that when the asset will be discarded, sold, etc. Okay, you must have heard the concept of loss on sale of asset and profit on sale of asset in your accounting provision. In case of loss on sale of asset, we generally show that in the debit side of the trading and P&L account. And profit on sale of asset, we generally show it in the credit side of profit and loss account. So terminal debt, if I'm going to teach it in a very simple way, terminal depreciation is nothing. It's just loss on sale of asset in case of power generating undertakings. So if you are a power generating undertaking and you are claiming depreciation as per SLM method, then in the year in which those assets are going to sale, discarded, etc., you need to calculate that either it's loss on sale of asset or profit on sale of asset. If it is loss on sale of asset, it will be called terminal depreciation under income tax. And we will show that terminal depreciation under trading and P&L debit side because it's a kind of a loss on sale of asset. And when loss generate? When WDV is more than sale price. So I have an asset in my power generating business and WDV is, for example, 5 lakh rupees. So if I sold this asset for 4,50,000, that means 50,000 loss. And then 50,000 loss is called terminal depreciation under income tax. There's nothing. That is simple loss on sale of power generating undertaking. And what if a selling price is 6 lakh rupees? Then it will be called balancing charge. We will discuss balancing charge later. For now, we are discussing types of depreciation. So there was normal depreciation, there was terminal depreciation, and now there is additional depreciation, etc. So terminal depreciation, do not get confused, do not get bother what it is. It is a simple loss on sale of asset. Okay. So let's read the provision. Terminal DAP in case of power generating units, if any asset is sold, discarded, etc., then or otherwise destroyed in the previous year, the depreciation amount will be the amount by which the monies payable in respect of the building, plant, or furniture together with the amount of scrap value, if any, falls short. So if you're receiving the amount and that is short the WDV of the asset, that is technically what? That is a loss. So for your convenience, I have already write the provision in short that terminal depreciation is equal to WDV of such asset minus money received for such asset. For your convenience, you can read it like this, that is loss on sale of asset. But for in examination, you cannot use this word, loss on sale of asset. You have to use the word terminal depreciation. Now there are rates of depreciation. You should go through it yourself. That is building rate 10%, 5%, a temporary structure rate is 40%. And somebody is asking the rate that is for plant and machinery is 15%. For motor car, it's 15%. Furniture, fitting, etc. You should go through all the rates. Aeroplanes having 40%. The maximum rate is 40%. The government, the income tax restricted. The maximum rate for depreciation is 40% now. Earlier it was 100% also in some cases, but now it's 40%. Ships, aircraft, this is general rate for plant and machinery. Is very important for examination. That is 15%. Okay. The know-how, the technical know-how, copyright, all intangible asset having the same rate, that is 25%, except goodwill, etc. Now the illustration came, and before taking the illustration, let me see the queries. It's somebody's asking. खुशी गुप्ता is asking, sir, new plant machine purchase करने से मतलब यही ना कि second hand नहीं होनी चाहिए. Yes, खुशी. नई प्लांट एंड मशीनरी का मतलब यही है, सेकंड हैंड नहीं होनी चाहिए. एंड आई गेस आपने जो क्वेश्चन है वो थोड़ा पहले भेज दिया, अब क्योंकि हमने उसकी डिस्कशन कर लिया है व्हाट इज एलिजिबल एसेट, एंड वहां मैंने आपको बताया दैट सेकंड हैंड मशीन्स आर एक्सक्लूडेड. सेकंड हैंड मशीन्स कैन नॉट क्लेम additional depreciation. Okay. Keshav is asking, sir, what if machinery purchased on 30th March, even it is purchased on 31st March, the half of depreciation can be claimed under income tax. If you purchase on 30 or 31st March, it should be put to use. Okay. So if it is not put to use, then you cannot claim additional depreciation on normal. But if it is even purchased on 31st March and put to use, you can claim 50% of your normal debt and 50% of your additional debt. Okay, Mr. Keshav. Next, sir. Sir, इसे हिंदी में भी explain कर दो. किसे? This is a problem, Miss Krishna. If I am going to explain the in Hindi also provision and in English also, so we are actually short of time. We have to complete PGBP in 5 lectures. It's a huge, gigantic topic. It's like 150 pages topic. So I cannot do this. But if Institute allowed me more lectures, like 10 lectures of PGBP, I can explain the whole PGBP in Hindi also. But for now, it's not possible. I'm so sorry. Okay. Okay, somebody is asking, Ishan Bhatt, sir, please show the format of how to calculate net profit. Ishan, I have discussed the provision in last session and I already made a format in that also. But when we'll complete all the provision, I will also send or upload the chart and the diagrams and the format for that also. But if you need to understand what is the format, you should watch the last class. Okay. Okay. So now we have a question of depreciation. Let's discuss that, and it's very simple. Let me tell you, it's very, very simple topic. Calculating depreciation is easiest thing. You just need to learn the rates of depreciation and that 180 days concept, and that's it. Question says, Mr. X, a proprietor engaged in manufacturing business, furnishing the following particulars. Opening balance of plant and machinery has been given 30 lakh rupees. New plant and machinery, which is purchased on 8th June, is 20 lakh rupees. New plant and machinery acquired and put to use 8 lakh on 15 December. And I have the question in printout form also. So when I'll solve on the other sheet, we should have the provision with ourselves. Computer install and so on. So question says calculate depreciation and additional depreciation. So question says, and we are going to do it. Let's do it. So the question was saying, you have the opening balance. First of all, the opening balance, opening WDV has been given on 1st April 2022, and that was rupees 30 lakh. Okay. On this opening WDV, we cannot claim additional depreciation. Fine. For your convenience, I can write it down the provision over here. Normal depreciation, additional depreciation. So on this, we can claim normal depreciation, but cannot claim additional depreciation because additional debt can be claimed as it is purchased and put to use in the same year. That is the last year closing balance, which has been carried forward. Okay. Is it more than 180 days concept applicable on 30 lakh or less than? Of course, it's more than because it's last year asset. And depreciation rate on plant and machinery is 15%. So normal debt will be calculated at 15% rate on this. Then second point. Now new plant and machinery purchase and put to use on 8th June. So we have purchased a new plant and machinery on 8th June 2022 for 20 lakh rupees. Very good. So can we claim normal depreciation on that? Yes, of course. Is it less than 180 or more than 180? It's because put to use on 8th June. And if you will calculate the days from 8th June till 31st March 2023, that will be more than 180 days. So normal DAP rate will be again 15%. Is it eligible for additional depreciation? Yes. And additional DAP rate will be 20% because it has been used for more than 180 days. Now the third asset. One more new plant and machinery purchased and put to use on 15th December 22 for rupees 80,000, 8 lakh rupees. Okay. Can we claim normal depreciation? Yes. Is it more than or less than? It's less than because 15 December till 31st March days are less than 180. So normal DAP will be 7.5%. And is it eligible for additional DAP? Yes, but the DAP rate will be half again, 10%. Moving on to fourth, computer purchased. And it's an office. And it is on 2nd January 2023 for rupees 3 lakh. Can we claim normal depreciation? Yes. It's less than 180 and computer depreciation rate is 40%. So we can claim half of it, 20%. Can we claim additional DAP on this or not? Okay, let me ask you this question. Let me see how strong your memories are. So can we claim additional DAP on computer? I'm waiting for your answer. Let me see who are going to give me the correct answer first. So can we claim additional depreciation on computer or not? And why also? Oh, wow, it's so good. Rushita answered no. Well done, super fast. Jitendra answered no. Well done. As it in office, correct. And Diksha also answered correct. No, we cannot claim additional DAP on computer because that is installed in office. And it has been written that office asset cannot be eligible for additional depreciation. So I've just made it easy for you to find out the asset on which DAP or additional DAP can claim. If I need to solve it, I can solve it over here only. Okay, fine. On WDV, this is 15%. So my depreciation will be 4,50,000 on this value. New plant and machinery, we can claim normal depreciation that will come 3 lakh rupees. An additional depreciation that will be 4 lakh rupees. Simple. Then new plant and machinery purchase, then we will claim 7.5% of 8 lakh. That will be 60,000. And 10%, that will be 80,000. On computer appliances in office, we can claim 20% depreciation rate only. We cannot claim additional DAP, and that will be 60,000. So this is my normal DAP and this is my additional DAP. So my additional DAP will be for the year is 4,80,000. And this will be 450 plus 3 plus 60 and 60, that will be 8,70,000. So total will be 13,50,000. So if 58, 61 lakh my total block value less normal DAP less additional DAP. So you need to show them separately. 870, 480, and after that, that will be your closing WDV, which will become opening WDV next year. The balance additional depreciation, which have not been claimed completely over here. This is 80,000. That can claim in next assessment year, that is 2024-25. The balance 80,000 can be claimed in next year. Okay. So that was the solution. You can solve it just like that in examination. The normal depreciation, additional depreciation, you can show it like a working notes, and then you can calculate. And this will be really easy because at a time you will write the value of the asset, you can write in front of that whether it's eligible for normal DAP or additional DAP and the rate less than 180 or more than 180. So it will be really easy to solve in this format also, or you can use any format you like. Okay, so this question we just solved it. Moving on to notes, there's the solution. You can check it out. Okay, now moving on to our new topic, and that is actual cost under section 43(1). After that topic, the balancing charge will come. Terminal depreciation, brother, is balancing charge. Terminal DAP shows the loss on sale of asset, and balancing charge talks about the profit on sale of asset. So this concept is in between those, brother. Okay. So now actual cost means generally actual cost. Why we are finding the meaning of actual cost? Because we need to charge depreciation on actual cost. And in some different situation, actual cost can be different. General meaning of actual cost, I have written over here, their actual cost to the assessee. The actual cost means cost to you. For example, there is a plant and machinery value. The market value is 10 lakh rupees. You want to buy it. When you went to the showroom, you came to know that there is a discount is offering 80% discount on that plant and machine. So you got that machine in only 2 lakh rupees. So what is the cost, actual cost to claim depreciation? Market value was 10 lakh, but due to some discount or the policy or your destiny or you are lucky, that's why you got that machine is only for 2 lakh rupees. So what is actual cost to claim depreciation, or what is the actual cost to show in the books of account for income tax purpose? That we are going to discuss it. And income tax said 2 lakh will be the cost to you, because the actual cost means actual cost to assess. If you got that machine free of cost, due to some policy of the company, you are the some special customer for them, or the 100th anniversary of that company, and it has a policy that they will give 10 machines free to the customer, and you are one of them. So if that 10 lakh machine you got for free, then the actual cost will be zero for you, zero. You cannot claim depreciation, because actual cost means if you spend something out of your pocket, that is the actual cost to you. So that is exactly what it has been. Their actual cost to assessee less any cost met by directly or indirectly by other person or authority, that means actual cost. There are different situations in which we will find out what is the actual cost. I have also made some summary kind of to understand what is the actual cost in different situations. The actual cost means the actual cost of the asset to assessee is reduced by that portion of the cost thereof, if any, as is meant directly or indirectly by any other person authority. However, there is a restriction. If you're going to buy any capital expenditure, then up to 10,000 can be done in cash. Any excess, if is in cash, then it's not going to be treated as a part of your asset. So all expenditure exceeding in cash more than 10,000 will not form part of cost of your asset. However, where an assessee incur an expenditure for acquisition of any asset or part thereof, in respect of which a payment or aggregate of payment made to a person in a day, otherwise than when account paid check drawn on a bank or account paid bank draft or use of electronic clearing system. You have to pay it via bank or NEFT or any that kind of mean. Then such other prescribed electronic mode exceed 10,000. So if you pay anything more than 10,000, except the base is specified by the government, then such exceeding 10,000 value shall not form part of actual cost of such asset. Prescribed methods are IMPS, RTGS, NEFT, via check, etc. etc. Actual cost in certain special costs can be different. Asset used for business after it ceased to be used for scientific research. There's a separate concept of scientific research which we will be discussing, but for time being it says that if you are running a business and you are doing the scientific research business, after that you're going to do some invention, etc. And for that scientific research business, you bought any machine, then the cost of that machine, if you used it for your business, will be the cost after the cost which has been claimed as deduction under section 35(1). So for the time being, you can skip that provision because we will discuss this provision in detail when we will be discussing the scientific research provision, because that is huge provision and might be you are going to be confused when we are discussing those provision in shorthand. For time being, you can understand this with the help of this simple diagram, the actual cost minus deduction under section 35(1). So in the case of if you are receiving any scientific research asset, then the actual cost for you will be the actual cost minus deduction under section 35. Section 35 refers to scientific research provision. So just relax, do not bother. I've explained in detail the scientific research provision with example, and then you will understand what we were talking about over here. Okay. Inventory converted into capital asset and used for business or profession. If you have an inventory, a stock with you, but you convert that stock into your capital asset. For example, you have a stock, you are a builder and you have buildings in your stock. But then you think that out of those 10 buildings, you need to convert them as your capital asset. In that situation, what will be the actual cost of that capital asset is explained over here. If any inventory converted into the capital asset, then the fair market value of that inventory at the time of conversion will be treated as cost in the hands of the assessor. So where inventory is converted or treated as a capital asset is used for the purpose of business or profession, the fair market value of such inventory as on the date of its conversion into capital asset determined in the prescribed manner shall be the actual cost of such capital asset. It's very simple. If you have inventory, you are converting it into your capital asset. At the time of conversion, the market value will be the cost of that capital asset. Asset is acquired by way of gift or inheritance. That means by way of will, etc. So where an asset is acquired by way of gift or inheritance, its actual cost shall be the actual cost to the previous owner, the donor, the person who is gifting it to you, minus depreciation allowable to the assessee as if asset was the only asset in the relevant block. So if you acquired any asset by way of gift, etc., then the actual cost will be the actual cost to the previous owner, less depreciation, if any, allowable, assuming that it is the only asset in the block. Further, any expenditure incurred by the assessee, such expenditure on freight, installation, etc., will form part of the actual cost of the asset. Second-hand asset. If you buy any asset second-hand from anyone, So government think you might bought it on a higher price to claim higher depreciation. Higher depreciation will reduce your profit. So there can be manipulation. So in case of second-hand asset, if you purchase any second-hand asset, then the cost of that asset will be determined by the assessing officer if they think that you technically wants to manipulate your profit. So where before the date of its acquisition by the assessee, the asset was at any time used by any other person or satisfied the for purpose of business, etc., the assessing officer will decide the value. Okay. The general provision, you should go read through it. If there's any issue, I'll definitely going to help you. Reacquisition of asset, this is important. If there is any asset which I have already sold to someone, and now again I am buying the same asset again, reacquisition of the same asset which have been transferred by me earlier. In that case, what will be the cost of that asset in my hand? Where any asset which had once belonged to the assessee and had been used by him for the purpose of his business or profession, and thereafter ceased to be his property by reason of transfer or otherwise, is reacquired by him, then the actual cost will be lower of these two values. The actual cost of the asset when he first acquired, the cost when he first acquired the asset, less depreciation, assuming that he never transferred it. Okay, or the actual price for which the asset is reacquired by him, whichever is lower. So if Mr. A purchased some asset and then sell it to someone and then again reacquiring it, then we need to calculate the actual cost as per value A or B, whichever is less. Building previously the property of the assessee. Where a building which was previously the property of the assessee is brought into the use for the business or profession. So it was a personal property. The building was the personal property for the assessee, and now he's just transferring that building into his business. Its actual cost to the assessee shall be the actual cost of the building. Then how we will find the cost? We will find the cost that whatever the cost of that building earlier, and assuming that if it was in business from that date, from the date of purchase, then what should the depreciation already been allowed it to it? That will be your actual cost. For example, if a building has been purchased for 10 lakh rupees 3 years before for personal purpose, and now this building transferring into the business, then what will be the cost of that building for business? It says, assume it that it has never been used for its personal purpose. It was always in business. Then 10 lakh cost, we need to deduct the depreciation of 3 years. Depreciation year 1, assuming it was in business, then 2, and then 3. After 3 years of depreciation, what will remaining the value of that asset will be the actual cost in your business, assuming that you have never used that building for your personal purpose. A question of car purchased. Understand? Now, this is a question of car, not building. A car purchased by Dr. Saman on 10th August 19 for 525 for personal use is bought into profession, used on 1st July 22 by him when its market value is 250. So what will be the cost for the purpose of business? The answer will be 5,25,000 will remain the cost of that car into the business, and you can claim the depreciation on it. Because if it would have been the building, if this question relates to building, then we're going to charge depreciation from 10th August 2019, 20, 2021, and 21-22. After these 3 years depreciation, the WDV will be the as value for our business, and on that value we can charge depreciation. But remember, this is not the case of building, this is the case of car. So the market value we will take as the cost for the purpose of depreciation. Capitalization of interest, it's a very simple concept. You already know about this, that if you purchase any asset on loan, then the interest accrue on that loan will form part of the asset cost till the commencement of business or first put to use. Once the asset first put to use, then the interest on loan on acquiring such asset will be your revenue expenditure. You cannot capitalize it. So certain taxpayer have with a view to obtain more tax benefit and reduce the tax outflow, resorted to the method of capitalization of interest paid or payable in connection with acquisition of an asset relatable to the period after such asset is first put to use. So it's a very simple concept. Till first put to use, you can capitalize your interest in the cost of the asset. And after first put to use, all the interest will go to the profit and loss account as your revenue expenditure. You cannot capitalize that amount. It's a simple accounting principle also. Amount of duty of excise or additional duty leviable shall be reduced if credit is claimed. Same like GST, if the credit is available in respect of any asset, and you claim the credit of that GST portion, that you cannot claim depreciation on that part. It's a universal rule that either you can claim debt or you can claim the credit of any duty. For example, if I am going to teach you with the help of GST example, because GST you must all be aware, and you are also taking classes of your subject 4th B. So if any asset cost is, for example, 1 lakh, and GST, whether it's IGST, CGST or SGST, we are taking GST rate 18%, like 18,000. So if you took the credit of this 18,000, then you cannot claim depreciation on that. In that case, actual cost will be 1 lakh for depreciation purpose. But for example, suppose this 18,000 credit is not available because you are selling goods which are exempted from GST. So in that case, you cannot claim credit. So if you cannot claim credit of this 18,000, then the cost of the asset will be 1,18,000 for claiming depreciation. It's the same case we are discussing over here. When you import any article, Custom Act is applicable and they charge a duty which is equivalent to excise duty. And in excise duty, there is a concept of SENVAT. Same creditor was available. So now if it's excise duty or GST is applicable on import of any goods, and if you are claiming credit of that, if you are claiming credit of any duty, remember any duty credit is available, that cannot be passed of your actual cost. But if credit is not available, then that duty will be form part of your cost and you can claim depreciation on that. So read carefully, it says, where an asset is or has been acquired by an SSC, the actual cost of the asset shall be reduced. So if there's 1,18,000 and you claim 18,000 credit, then cost will be reduced by 18,000. That means you can claim depreciation on only rupees 1 lakh. Reduced by the amount, that means credit. That means almost about credit. The duty of excise or the additional duty levied under Section 3 of the Custom Tariff Act, in respect of which a claim of credit has been made and allowed. The main word is credit has been made and allowed. Then you cannot claim that duty as cost of your asset. The same concept is for subsidy or grant. If government paid any subsidy or any grant, I have told you that asset cost is 10 lakh. Government gives you subsidy of 2 lakh rupees, then cost will be for you for 8 lakh rupees. Okay. If any non-resident acquired asset outside India and brought that asset into India to use in his business, the same concept for building was applicable. That the cost of that asset or purchase price of that asset, and we are going to reduce depreciation, assuming that if that asset has been used in India, what depreciation would have been allowed on that. And after that depreciation, whatever the value, that is the cost for you. What is the meaning? Capital asset on which deduction is allowed in Section 35AD. If on any capital asset, the Section 35AD was a special provision. I have told you that we will discuss it later. So under Section 35AD, there is 100% deduction allowed for capital asset if they are fulfilling certain conditions. So if 100% deduction has been allowed, there is no concept of depreciation remaining. Okay. WDV, asset acquired by the SSC during the previous year, asset acquired before the previous year. You can read it down. It's very simple. The format is very simple. You should take the WDV of the block of asset. Then the last year depreciation, after that, that will become our opening WDV. In our opening WDV, you need to add all the actual cost of the asset as per the provision acquired and put to use for the purpose of business. Not being acquisition of goodwill or profession. Goodwill and profession are excluded because we cannot claim depreciation on that. So opening WDV plus actual cost of the asset reduced by the money received in respect of any asset. I have discussed this format with you already. In the last session, I provide a simple format as a summary of depreciation concept. The same format is over here, except this point. This is a new point in case of slump sale. So what is slump sale? We will discuss in capital gain chapter. For time being, you can skip this thing. So opening WDV plus asset purchased, actual cost of asset purchase, less money received, etc. After that, we will have our WDV for depreciation. We will claim depreciation, and then the closing WDV will become the opening WDV for the next year. Carry forward and set off of depreciation. It says carry forward and set off, we have a separate provision for that, but it's a very interesting thing that carry forward and set off only talks about the losses, not the depreciation provision. Now, what the carry forward and set off provision for depreciation, we called it unabsorbed depreciation. Like what? Under accounting provision, for example, if there is sale of 50 lakh, or I should not take sale. Under accounting provision, there is a receipt side, including sale, etc. 100 lakh. There is business expenditure, 90 lakh. And current year depreciation, as per accounting provision, is, for example, 30 lakh. So we say there is a loss of 20 lakh, generally. Fine. But under income tax, this does not call loss. This is called depreciation. That means if loss due to depreciation under income tax, that is called unabsorbed depreciation. Unabsorbed depreciation, we do not call it a loss. We call it an unabsorbed depreciation. That means the same example as above under income tax, then I'll call it as a unabsorbed depreciation 20, not loss. Understand? So if loss due to depreciation, that is called UD, unabsorbed depreciation. So as the loss arise under income tax, that can be carry forward and set off with other income. The same concept is with unabsorbed depreciation. That's only a kind of a loss, fine. But the concept says if you have unabsorbed depreciation, you can set off that depreciation in current year from any head of income, except salary. You cannot set off it from salary head. Clear? And of course, there is an income of casual income. You cannot set off it from casual income also, because casual income cannot be set off from anything. And if you are not able to set off, for example, in current year, there is a income from house property, rupees 15 lakh. Then you can set off this from, and remaining unabsorbed depreciation will be 5 lakh. So if that remains, you can carry forward it for future year also. And there is no time limit. It's infinity. If there is unabsorbed depreciation, that means if there is a loss due to depreciation, you can set off it in current year from any head of income except salary and casual income. And if anything is remaining, then you can carry forward it till infinity years. That is the provision regarding carry forward of unabsorbed depreciation. Section 32.2, I have explained you what is the meaning of unabsorbed depreciation if loss due to depreciation. Okay. The carry forward of unabsorbed depreciation, where in any previous year the profit or gain chargeable are not sufficient to give full effect to the depreciation allowance. The unabsorbed depreciation shall be added to the depreciation allowance for the following previous year and shall be deemed to be the part of that. You will understand it more clearly when the set of chapter will be discussed with you, of course. If no depreciation allowance is available for the previous year, the UD of the earlier previous year shall become the depreciation allowance for that year. Order of set off, you can set off this under different heads of income, shall first be given to business losses and then to unabsorbed depreciation. You cannot set off it from salary head. The unabsorbed depreciation can be carried forward indefinite number of years. There is no time limit to set off. Okay. Is the priority of set off. So first of all, you should claim current year depreciation, then brought forward business loss, and then the unabsorbed depreciation. This priority of set off, etc., will be discussed with you when we will discuss carry forward and set off of losses chapter. Illustration 3. This is again regarding the depreciation concept. I am going to solve it over here for you. We just need to see on which we can claim normal depreciation and with which rate, full rate or half rate. Okay. Because you're chartered accountant, not in a manufacturing, etc. So additional depreciation concept is not applicable. Let's see, he purchased a computer, including computer software, including 27 September 22 and put to use on 1st October. If you will calculate days from 1st October till 30th of March, that is more than 180. So we can claim depreciation rate upon this 40%. Clear? Computer UPS put to use on 8th October, that means less than 180, half rate of depreciation 20%. Printer 1st October more than 180, that the rate will be 40%. Books other than annual publication are of 12,000 rupees. On books, there is a depreciation rate of 40%. You can go through the depreciation rate chart, which was earlier in these notes, and you will find out the depreciation rate on books. So it is 40%, and for books, because on 1st April 22 put to use, more than 180, we can claim full 40%. Office furniture. In case of office furniture, we can claim remember, this is for this, this is for this, this is for this, and this is for this. Fine. So now office furniture again acquired from a practicing chartered accountant, we can claim depreciation rate is 10% more than 180. And laptop 8th October put to use less than 180. So depreciation rate will be 20%. You can calculate the depreciation like this. This will be like 64,500. So you can check it out from the solution also. So it's a very simple question. If you know the provision, everything is simple. Everything. If you don't know the provision, everything is difficult. Okay. So here is the, you can check this, the depreciation concept. Now, this concept related to Gamma proprietor started a business of manufacturing of tire and tubes, motor vehicle 1122. The manufacturing unit was set up on 1522. He commenced his manufacturing operation. The total cost of the plant and machinery installed in the unit. I have the question, so I'll read it and solve in the other sheet. Okay. Illustration number 4. This is again regarding the depreciation and additional depreciation. So it says this company has total plant and machinery costing 120 crores. And 3 kind of information has been given. Out of this 120 crore, 20 crores is second hand. Okay. Scientific research purpose. Scientific research has separate provision section 35, 15 crore, and balances, which is new, that is 85 crore. So for scientific research purpose asset, there is specific provision which allows 100% deduction in respect of this, which we are going to study later. So there is no depreciation concept on this, so we can forget about this. In additional depreciation, there was a point which says, last point which says, no additional debt can be claimed on any asset on which 100% reduction is allowed. So because there is 100% reduction on this, there will be no depreciation because the full 15 crore has been claimed as deduction already. So we cannot claim anything else upon it. Okay. Now moving on to this. On second-hand machine, we can claim normal depreciation. Normal depreciation rate is 15%. That will be 3 crore. And we can claim normal depreciation over here also. The machine was purchased in May and June. So both are more than 180. So on this, we also can claim normal depreciation 15%. That will come, I have already solved it, 12.75 crore. Now, if talking about additional depreciation, it's a second-hand machine. And we all know that on second-hand machinery, there is no additional depreciation concept applicable. Yes, we can claim additional dep on this with 20% of rate. That will come 17 crore. So my normal dep and additional dep answer is over here. Normal depreciation is 15.75 crore. This and this. Additional dep in the question is 17 crore. If we reduce both these value out of these costs, that will be my closing WDV, simple thing. And that will be my opening WDV for next year. I hope it's clear. There is a question and with a solution. If any building, machinery, plant is not exclusively used for the purpose of business, it's already used for other purpose also, then a proportionate depreciation, etc., or premium, etc., will be claimed as purchasing officer determined. That was the first assignment which has been completed. Almost 46 pages assignment we have completed out of our more than 150 pages assignment. Okay. So now moving on to our second assignment. Before that, I'm going to take your queries. Then we'll move on to second assignment. This is our second assignment. I have already uploaded this also. Yesterday night, you must have been downloaded these notes. Okay. So this is assignment number 2 with a new quotation that there is no elevator, no shortcuts to success. You have to take the stairs. That means you have to work hard. This is actually applicable in our course. We need to clear foundation, then 2 groups of intermediate, then our training, then our final 2 groups, and have multiple papers, multiple online trainings, multiple orientation, etc. So you have to work hard. You have to take the stairs. You do not have any elevators. You cannot use that to become a successful person in your life. So where we finished, that was the example of additional depreciation. And now the lost brother balancing charge is here. I told you in case of power generating undertaking, there is a concept of balancing charge and as well as terminal depreciation. We discussed the terminal depreciation concept in the first assignment, and now here is the balancing charge comes to deal with you. Okay. And what the balancing charge? Balancing charge is nothing. This is profit on sale of power generating units. That's it. As terminal dep was the loss on sale of asset, it is profit on sale of asset. But in this case, we need to compare 2 things, profit and one more thing. Then we'll find out the balancing charge. Okay. Let's see if there is any query. Okay, well done. Very good. This class is on YouTube also. So if anybody has skipped any point, then you can scroll back and again going to watch it. Even after watching it, if there's any issue, I will solve it. You can ask me in the next session. As Vaishali is asking, sir, actual cost first point. So I already explained it. If there's any issue, you usually read it once more. If there's an issue, I will explain it. Okay. Ms. Bhumika is asking, sir, we cannot avail ITC on GST. Component same is applicable in this point. Yes, it's the same thing. If you avail the ITC in GST, you cannot claim depreciation on that part of any asset and vice versa. If you need to claim depreciation, you cannot claim the ITC of that. Unabsorbed depreciation, loss due to depreciation. Yes, Mr. Sushil, you got it right. If there is any loss due to depreciation, we called it unabsorbed depreciation under income tax language. Keshav is saying, sir, break le lo. Yes, of course, just a second. First of all, query le le, uske baad break le lenge. What do you mean? Elevator means escalators, lifts, etc. Okay, that's called elevator, in which you can have a shortcut to go into any floor. Okay. खुशी सिंह सर पोर्टल पर सिर्फ फर्स्ट असाइनमेंट शो हो रहा है. नहीं खुशी, मैंने कल ही अपलोड किए हैं रात को. मैंने इस बैच के स्टार्टिंग में, आज क्लास के स्टार्टिंग में बताया भी है कि आपको नोट्स अगर नहीं दिख रहे हैं तो कहाँ जाकर देख रहे हैं. दोबारा से मैं आप लोगों को बता रहा हूँ. ICI.org पे लॉग इन कीजिए. क्लियर. गो टू द बोर्ड ऑफ स्टडी नॉलेज पोर्टल. दे विल आस्क फॉर योर CRO नंबर एंड डेट ऑफ बर्थ. Fill it. After filling it, you will find a section in where assignment etc. is there. You should click it. Then you need to search the faculty name. Click on the faculty name. There will be various faculty name will be shown. Then see Ankesh Sharma. You need to click that, and as well as you will click see Ankesh Sharma. I believe that assignment number 2 you can find it there. Okay. So it's good to go. We should take a break for 5 minutes, and then I'll be back. We will discuss the balancing charge concept. Mr. Manish, can Welcome back, everyone. So, as usual, I have my tea, and I believe you must have your tea, coffee, etc. So, we were discussing the balancing charge concept, and before that, let me share you something. In the first session, I have told you that CA is not difficult because if I can do it, I believe anyone of you can do it. Because I was a very, very, very average student, and let me tell you that the teachers of my school, I have beaten by everyone. There is no punishment which is not given to me. I have been beaten in college, school as well as home also, of course, because always in this sports activities, I do not like to study actually at all. I don't like study at all, but still, if I can do CA, then I believe any one of you, because once you realize that how much important this is for your future, then you automatically generate interest in studies. Exactly the same thing happened till 10th. I was a below average student. We all have brains. We all have brains equal. Like we are, God has actually given us brain unequal, but it depends where we are utilizing it. Some of utilizing in WhatsApp, Instagram, somebody utilizing in studies, somebody utilizing in making weapons, somebody utilizing in become a terrorist, somebody's doing any. So every work needs some kind of skill and brain. Without brain, we cannot do anything. So it depends how we use it. That's actually matter. Somebody can become Osama bin Laden and somebody can become Obama. And just because the way you explore your brain or your life. So initially, I was not very good in study. I was very bad in study technically till 10th. But one thing happened that my elder brother, he become, or we can say he selected an MBBS. He become a doctor. And what happened? Once he selected for MBBS, all the relatives, all the friends of my family member, etc., everybody start recognizing him, giving him a lot of respect, and which was not usually happen. So the different kind of transformation. Like my brother just cleared MBBS examination, and he's a different person in the eye of everyone, and that actually hits me. Nobody is caring about me. Nobody listened to me because we always treated as a kid. But when he just cleared the MBBS, he got a lot of respect from everyone. And that thing struck me that if we need recognition, we need respect, then we have to be something. We have to do something. And from that day, I realized that study is so important. This is my future and I have to maintain it. Then I start studies. And from 11, 12, and after that, there's a different person of mine. Nobody needs to beat me for study purpose because I realize myself that this is my future. And of course, we all have dreams in our life. Somebody of you wants to go outside, abroad, for traveling purpose. You might need to buy a car, your dream car, a dream house, good branded clothes, traveling. We all have dreams. And we cannot fulfill our dreams by sleeping. We have to wake up. We have to do something. We have to do something. Nobody else is going to do that. So we have to do something. And whatever dream you have, you can complete it. You can achieve it. The future is in your hand. These books, the pen, the pencil, the notes, the classes, these are your future. And you have to work hard for that. So you can achieve anything, money, reputation, recognition, whatever you want, you can achieve it with the help of these studies. So for next 2 or 3 years of your hard work and next 30 years after that, you will have a great life. The life you always wanted to live. The life full of your dreams. And you can see those dreams actually going to be true in your life. So dreams can come true. You have to work hard for that. Nobody else is going to do that. So this 3 years, focus on your studies, make a plan, keep your interest in your studies. If you want to create interest in your study, I have created my interest in my studies because after that incidents happen, I want to be recognized. I need that people of relative of me should recognize me also, give me respect also. And it happened. When I become a chartered accountant, before that, They call me with my nickname. The day I cleared this, they start calling me with my normal official name. That was a transformation. It happens. It happened with me. It can happen with you. If I can be a CA, you definitely can be a chartered accountant. So please be focused for your dreams, for your life. If these 3 years you're going to waste, you have to work very hard for next 30 years. And you like don't think so that you're able to achieve the goals, whatever you want. So for next 3 years, you sacrifice your parties, your many things which might be distracting you. And after that, next 30 years, you will have a life you always want to have. Okay. So moving on to our notes. Balancing chart. Arya is saying, Happy Guru Purnima, sir. Today is Guru Purnima. I don't know. Seriously, I don't have any idea. If it is, thank you so much. Sir, Vaishali is asking 35 AD में WDV nil for next year. Sir, second assignment नहीं है. 35 AD we will discuss in the second assignment. Do not worry. There's a huge provision of 35 AD and section 35. Each and everything will be discussed. Do not worry. Just relax and enjoy the study. Just grab the knowledge, whatever the faculties is providing you. Just be focused. Everything is simple. Sushil Kumar Barig, you are very much intelligent student. That's why, sir. No, I'm not intelligent. I'm telling you, I've beaten by every teacher of my class or college. I've beaten my mother a lot of time because I was not in study at all. I was a very, very poor student. You won't believe I scored second division. I scored 59% only in my 10th. Can you believe that? 59% marks. Only 59% in 10th standard. So people generally think CA can only be done by those who are the topper of the class. It's not true. The topper of my class, he also joined the CA. He didn't complete it. And I was because you can do anything if you want to do that. Nobody can make you study. So if you have interest in this course, you are definitely going to be a chartered accountant. Even if you do not have interest in that course, need to create your interest in that course. Whatever dreams you want to achieve, just imagine that dreams and you just in the between is these books are just there. So you have to read it. You just need to read it. Your life is very privileged. I personally feel most of you have everything like mobile phone, a good family, a good house, a car, Activa, bikes, AC, etc. You must have everything. Most of you must have. And what we are just asking just to books, that's it. You do not need to do any physical work. There are a lot of students, there are a lot of people who want to study, but they do not have any opportunities due to their financial problem, their family problem, etc. And you should thank to God that He gives you each and everything, and just asking your parents is just asking for study because of your future only. They have already made their future. Just for they are asking you to study and you have to do it for yourself. Okay. So if somebody is not doing good for himself, so what you can expect him to do for anyone else? So be focused. You all will be chartered accountant. Okay. So balancing charges. Balancing charge, I just told you that's kind of a profit on sale of asset. So section 41 to provide for the manner of calculation of the amount which shall be chargeable to income tax, and I have made a small summary for it for both the provision together. Special provision regarding power generating undertaking. That's a terminal depreciation. That means loss on sale of asset. And we will show it in the debit side of the trading and P&L account. And how we will calculate the balancing charge if the money received exceeding the WDV of the asset. That means profit, that means balancing charge. In that case, we need to calculate that profit as follows. If in above case, money receivable exceed the WDV, then minimum of the following shall be taxable in PGB. Difference between actual cost and WDV, that means the profit. Difference between actual cost and WDV, the depreciation you claim, the purchase price and the WDV till now. For example, the purchase price was 10 lakh and now the WDV is 6 lakh. So we are talking about in point number A, 4 lakh rupees. And difference between money receivable and WDV. This is technically the profit. So the actual profit on sale of that asset or the amount which has been claimed as deduction, actual cost and WDV. So difference is technically the accumulate depreciation we can say. So accumulate depreciation or profit, whichever is lower, can be claimed as profit in the credit side of the profit and loss account. I hope it's clear. It's very simple now. Now the provision of scientific research has been. We were talking about this provision in earlier also. So if you are in a business in which there is some invention needs to be done, for example, might be some companies research on some kind of medicine. We are trying to make a medicine for different subject of chartered accountant course. So company is trying to make a medicine for accounts, for law, for income tax, for audit, etc. So there will be a tablet for it. If they succeed, I pray to the God they should not succeed, but assume there is a laboratory which is working on this, that they are trying to make a tablets like a medicine, like a disprin medicine of different subjects. So if you need to learn income tax, you need to take the medicine of tablet, and after taking it, you will going to remember all the provision of income tax by heart automatically. So just assume some company is working on it. So the first thing for these kind of invention is the research part. First of all, there must be invention. After that, the production will start. So the huge expenditure need to be deployed for this scientific research purpose. The problem is this: nobody knows this is going to be successful or not, because out of 10 research, might be one is going to be success or might be not going to success. So the provision says, if you are in a scientific research business and you are trying to invent some new thing, in that case, the major expenses will be before commencement of business, before actual production, of course. And income tax only allowed those expenditure which is post commencement. Before commencement only establishment expenses, etc. is going to be allowed. But these are the expenditure like salary of scientists, chemical purchase, material, plant and machinery, infrastructure, etc. Huge amount of investment. But business say only expenditure will be allowed in P&L, which is after commencement of business. So there was a problem. So to solve that problem, Section 35 has been specially drafted for only scientific research business. And it says that in case of scientific research business, there will be expenses. That is before commencement. Spelling commencement ki karni padegi. Just wait. Scientific research business. So there will be expenses before commencement or after commencement. Commencement of business. For example, commencement of business started on 20th July 2022. So the provision says any expenditure, whether revenue or capital, which has been done 3 years, within 3 years before the commencement of business. From that date, within 3 years. That means from 21st July 2019. So any expenditure on this scientific research between this duration on revenue or capital, but in revenue only regarding the material plus salary. Only these two expenditure can be claimed as reduction. These should be allowed only when this is related to business and the research is approved by government, approved by a specified authority. So there is a lot of condition. First we can last 3 years expenditure only. If the research is from last 4 years, then only last preceding 3 years expenses will be allowed. The last 1 year expenses will be lapsed, no utilization. For example, before 3 years, 10 lakh rupees expenditure has been done. This is of no use. For capital expenditure, all capital expenditure allowed except land. Should be related to, of course, business. So if I'll say that within 3 preceding years, the expenditure on material and salary was 50 lakh rupees for such research, and expenditure to building and other plant and machinery except land was 100 lakh. And suppose that tablet has been invented. We have a tablet of income tax. We have a tablet of accounts. We have a combo tablet of group 1. So imagine it has been done. I pray to God, it should not have been done, but imagine it has been done. So commencement started on this one, production started. So in this year P&L, in previous year 20 to 23, that means the P&L which has been drafted on 23, these expenses 50 lakh and 100 lakh can be claimed as deduction under section 35, 150 lakh. Like this. There will be no depreciation because the whole amount of capital expenditure also allowed as deduction. For example, 100 lakh for building and plant and machinery, on land 40 lakh expenditure. Land expenses cannot be claimed in a deduction. So if there are any expenses before commencement of business, then expenses of revenue nature, only material salary will be included. And for capital nature, all expenses except land will be allowed as deduction in the year of commencement of business. After commencement of business, all expenditure allowed, whether it's capital or revenue. After 20 July 22, all expenditure allowed under section 35, all revenue, all capital except land. Land expenditure cannot be allowed in any case. Fine. So this is before commencement provision. We can say name it A. And this is after commencement, this is say P. If your company does not wish to carry that scientific research themselves, if they want to carry this scientific research by any other scientific laboratory, that means we need to outsource that work. Even in that case, we can claim deduction under different category. If you outsource that course to any national laboratory, there is a 100% deduction. If you outsource that invention or that research to any university, college approved by government, you can claim deduction. If you outsource that to any company which is in this business of scientific research, invention, etc., then also you can claim 100% deduction. So technically, earlier there was 125% deduction, 150%. Now there's only maximum limit is 100% deduction. If the research is done by yourself, whether it will be before commencement or after commencement, so there are the provision. If the research has not been done by you, but it is outsourced, then 100% deduction will be allowed in different cases, whether it's a college, it's a national lab, it's a company who is in working that. It should be approved by government and related to business. And in some case, they are allowable, even if that is not relatable to business. So that's why whole deduction has been allowed under section 35 for all the capital expenditure. So we cannot claim normal depreciation. Back to the provision. So scientific research, it's a very interesting concept. Expenditure on scientific research. This section allows a deduction in respect of any expenditure on scientific research related to the business. Meaning of scientific research expenditure, etc. You can go through it. Not relevant for examination as such. This is the format, the chart diagram in which the expenditure has been explained. If you can see that. Incurred by SSC on scientific research, you should read this summary after the provision. So you will understand from where this revenue, capital, approved Indian company, etc. has been come. So after reading the normal provision, you can go through this chart. And do not worry, I'll provide chart of each and every numerical topic. I have prepared all the charts, but I will upload it after my last session of PGP. So you will going to revise those all provision very fast, and it will really help you in examination. Okay. So revenue expenditure, we discuss any revenue expenditure incurred by SSC on scientific research related to business would allowed as deduction in the year in which it was incurred. Expenditure incurred within 3 years only can be allowed, and in which only salary and material will be allowed if it is certified by the government. In case of a capital expenditure, everything is allowed except the expenditure done on land. Before commencement, same cases, 3-year commencement related to business, expenditure on land is disallowed. carry forward of the deficiency if certain expenditure has not been set off. The loss has not been set off. Just like the unabsorbed depreciation, if there is expenditure which has not been used out of the profit of the business of that year, you can carry forward it and again set off also. You cannot claim depreciation because the whole amount has been allowed as deduction. Sale of asset. This is again a very important topic. It has been asked in the examination as a separate question of 4 or 5 marks multiple times. So when you sell your asset, which is representing expenditure of capital nature, we have the separate provision regarding it. First of all, let me teach you the provision with the help of a diagram. So it will be easy for you to understand how to solve these kind of questions. It says, if any scientific research asset is there, scientific research asset has been sold to other business or into the market. Now, practically what happens, just try to understand it. If I have a plant and machinery and I'm using it for scientific research purpose for 50 lakh rupees. So what will happen under PGBP head, we will claim in the first year deduction under section 35, which will be 100%. That's we just read. So I will claim 50 lakh as a deduction. So the book value in the books of the assessee will be always nil. It's a fixed concept because the deduction is 100%. So whenever you will use a scientific research asset which will compliance or which is fulfilling section 35 condition, so the 100% deduction will be claimed in all cases. So the value of the asset in the books will be 100 even the first year. Now imagine this plant and machinery is a gigantic generator which is used for scientific research purpose. I purchase a 50 lakh rupees generator for my lab and that has been used for scientific research purpose. So what will happen? In the books of accounts, I will claim a deduction for this generator for rupees 50 lakh in the first year of business. So the book value of this generator will be 0. Now the question is whether the market value will also be 0. I have just used it for 1 year. So will the market value will also be 0? No. The market value will be reduced. Just for 1 year of utilization, it might be in market, I can sell it for 40 lakh, etc. Now the question arises, what if I sold this asset? There will be two situations. Because why we are selling it? Because might we do not need to use it or we need to purchase another generator or other quality or other technology. But the practical thing is that its market value will be there. Might be 40 lakh, 30 lakh, depend upon use. Even if after 3 years, so book value will remain 0. But after 3 years, there will be some market value, might be 20 lakh, might be 15 lakh, might be anything. So assume we are selling it after 3 years. Or we can say we are selling it at 5th year. And 5th year fair market value is, for example, 15 lakh. So when we sell the scientific research asset, there are two situations. Either though we will sell it without use for our normal business. That means I have a factory also in which the production is taking place. I have a lab also. So I purchased the generator and used for the scientific research purpose for 5 years. And then I sold it into the market. That means I used in scientific research business and sold. I do not use it for my normal business. The second case will be sold after using for our normal business. That means my factory needs a generator. So I did what? I transfer my generator from my scientific research lab to the factory and then use it in the factory for 3 or 4 years. And then after that, I sold it. So first case is if I sold it without using for my business, that means I sold it after using it for only scientific research purpose. And second case, I sold it after using for my business some year and then I sold it to the market. So if the scientific research asset has been sold without using for other purpose, then the PGBP income will be this. The PGBP income will be net sale price or cost which has been allowed as deduction under section 35A. For example, the market value is 15 lakh. I sold it for 15 lakh. So net sale price will be 15 lakh. And the cost for which we have claimed the deduction, not as 35, sorry, section 35 only. We have claimed the deduction for this asset in the first year was 50 lakh. So whichever is lower, that is my PGBP. That is not my capital gain, that is my PGBP. I will show it in the credit side of my trading and P&L account. 15 lakh will be treated as my PGBP income. If I sold this more than 50 lakh rupees, which is practically not possible, but if somebody sold it for more than 50 lakh, then capital gain provision will also applicate. So if you sold it till 50 lakh rupees, only PGBP income will be calculated. But if in some situation, if it is sold for more than 50 lakh, for example, 60 lakh, then in case we need to calculate PGBP as well as capital gain. So capital gain we did not discuss yet, so we can skip it. So the PGBP will be like this. In second case, if it is used for other business and then sold, it's a very simple provision. It says the other business opening WDV, for example, is 90 lakh. So if you use your scientific research asset for other business, then first of all, its actual cost will be added to the block of asset. And we all know the actual cost will always be nil. For section 35 and 35 AD asset, if you have claimed the deduction 100%, the actual cost will be nil always. So there will be no change in the WDV when you brought scientific research asset into the business, normal business. And when you will sell it, then capital gain provision will be applicable. That will be discussed in capital gain provision. So under PGBP, there will be only two treatment. If you sold it without using for other business, then the net sale price or the cost which has been allowed as deduction, which will be always the amount of purchase price. Lower will be your PGBP. And if you used for it other business, then in case of other business, it will form part of your block of asset and the cost will always be nil. It's a universal rule. Cost will always be nil. And then you will sell it. Then the capital gain normal provision will be applicable. It's slightly difficult somehow, but you have to understand, you have to revise it, you understand the concept, because I have a solved numerical also for this. So these are the provision, you can go through it regarding the sale of asset. I have already made a summary provision for your help, of course. These are the provision. Sold without having been used for other purpose, net sale price or the cost, whichever is lower will be PGBP. Or if you used for other business, then always cost will be nil. This is the question. And in the question, you have to just find out these PGBP answer. You cannot calculate the short-term cap gain or long-term. You cannot find the correct GTA answer. You need to calculate only PGBP, part A and part B. So I have framed a question for you with the answer, but not the solution. This is a homework for you. When we will have our next class, I will ask who has solved it. So if you are able to solve this PGBP income, right, of this question, I'll be really happy to see that, yes, you can solve it with the help of the provision. Even if you are not able to solve it, just try it. Otherwise, I'll have to solve it. So just please try this question with the help of a diagram. Just solve it as the format I have taught you just now. These are the contribution outsourcing contract in which you can claim the 100% deduction. Even the payment is related to business or in some case not related to business. So these are the name of the institution. You just need to go through it. After reading these names, you should see the chart which has been earlier in this notes. I've told you that you should go through that chart after reading the provision. All the provisions are same, 100% deduction in case of outsourcing. There is nothing new. This is the new provision. company engaged in business, scientific research, special provision. Company engaged in business of biotechnology or manufacturing of article or thing. If these are running scientific research business, then we have separate provision, special provision, and this is only applicable for company. Only company, not for any other associate, not for individual, HUF, partnership, etc. So company engaged in business of biotechnology or manufacturing of article or thing, not being an article or thing specified in the list of 11, the negative list like alcohol, spirit, etc. These are not for eligible for the benefit of this. Incurs any expenditure on scientific research on in-house research and development facility approved by the authority of a sum equal to the expenditure will be allowed. Such expenditure should not be in the nature of cost of any land or building. So in case of company which is involved in this business can claim all the deduction of all expenses in case of in-house research center. That means his own laboratory, but cannot claim any deduction of land or building, because in case of land, you cannot claim anything. But in case of building, he cannot claim this deduction, but he can claim the normal depreciation in this fact. If you claim deduction under this section, you cannot claim deduction under any other section of the chapter. Now moving on to a question, so you will be able to understand the provision. Illustration number 5. I can solve it over here. Mr. A furnished the following particulars for the previous year 2022-23. Compute the deduction allowed in section 35. So, amount paid to notified approved Indian Institute of Science. If there is outsourcing from any approved institute, there is deduction of 100%. So, this can be claimed as 100% deduction. That means 1 lakh rupees has been claimed. Amount paid to IIT Delhi for a approved, again, this also can be claimed as deduction 100%, 250. So 1 lakh plus 250, 350 deduction we can claim. Paid to X Limited, a company registered in India, which is main object of scientific research and development approved. This can also be claimed 100% deduction. That is 4 lakhs. So 4 plus 250 plus 1. We are now on 750. Then 750. Revenue expenditure on scientific research. The revenue expenditure on scientific research again also can claim as deduction. So then 750 then plus 3 lakh. 100% deduction. And we are moving on to 10 lakh 50,000. Then capital expenditure including cost of acquisition of land 5 lakhs. So out of 750 lakh, 5 lakh belongs to land. We cannot claim it, so only 250 can be claimed as a deduction. So 1050 plus 250, total 13 lakh can be claimed as deduction under this section in following case. You can see deduction is 13 lakh. It's so simple. You can see. We do not need to even use calculator for these questions, what we are solving from depreciation, additional depreciation, and so on. The problem is that there are multiple provisions under PGBP Act. So individually, whenever you will read a section and then you will solve it, you will find it very easy because you are just reading that section and you are implementing it. But when it will come to an examination, then you have to remember all the sections. That will be a problem. That problem, I have a solution. The chart. The chart I will provide you with all the numerical provision in a same place. You can revise it in like 15 minutes, all the provision, all the important provisions of PGBP numerical implication. So just stick to the provision, learn them, and then for the implementation purpose, I am going to help you. So reduction of 13 lakh, it was so simple to calculate. Investment linked incentive for a specified business. Section 35A, it has been come. So section 35A, we have learned this name, we have read this section earlier also, and I have told you that we will discuss about the provision of section 35A when the full provision will come. So here is the detailed provision of section 35A. 35A is generally, it looks like section 35 scientific research. Under section 35, it's a scientific research business And if it is doing some expenditure, then you can claim deduction in the year of commencement of business, almost the same provision of section 35. There's a list of specified business, and if you are doing any expenditure regarding that and capitalizing that, then you can claim deduction of all those expenditure in the year of commencement of business, 100%. Even if you sold the asset, which is specified in section 35AD, the concept of sold asset for scientific research almost applicable same. So under section 35AD, we need to learn the businesses, the list of businesses, almost 12 or 13 or 14 businesses on which this section applicable, the expenditure which we can claim as 100% deduction, and in which year the deduction is going to be claimed. So not very complicated, but you need to learn the business's name and the expenditure we can claim as deduction. So there are a lot of business. The name is starting from over here. First business is setting up and operating cold chain facility. We are talking about the cold storage. Setting and operating warehousing facility. That means they do not have refrigeration plant. That is cold storage. Which storehouse having the refrigeration plant technically, and those do not have the refrigeration plant, that is called warehouse generally. Laying and operating cross-country natural gas or crude or petroleum oil pipeline network. The businesses will be given in question. You just need to recall it. That yes, section 35AD is applicable or not. Building and operating a hotel of 2-star above category. Building and operating a hospital anywhere in India with at least 100 beds per patient. Developing and building a housing project under a notified scheme. Developing and building a housing project under a notified scheme for affordable housing. Production of fertilizer in India. Then we have beekeeping. Setting up and operating an inland container depot or a container freight station, beekeeping and production of honey and bee wax, setting up and operating warehousing facility specifically for storage of sugar, laying and operating a slurry pipeline for the transportation of iron ore, setting up and operating a semiconductor wafer fabrication manufacturing unit, developing or maintaining and operating, operating a new infrastructure facility. So these were the business 1, 2, 3, 4, 5, 6, 7, 8, 9, 11, 12 almost. You have to just read them. So whenever in examination, if any business has been written, so your brain will remind you that this name has been learned by you or not. A deduction is for 100% of the capital nature incurred during the previous year. When you're reading the capital nature, you might think that revenue expenditure has been excluded. No. All the revenue expenditure as well as capital expenditure, you need to capitalize them in the year of commencement of business or before commencement of business. So those expenditure, whether in revenue nature or capital, already capitalized in the books of account, and those are going to be allowed as deduction in the year of commencement of business. So for now, you might be thinking we are only talking about the capital expenditure, but it's not that. All the expenditure which are capitalized, for example, if you are building a hotel, then the material, salary, etc., all need to be the part of the building, and building is technically a capital expenditure. So your all revenue expenditure also the part of that capital asset, so that is allowable. So automatically, all the revenue expenditure you have done for constructing that building of hotel, hospital, warehouse, cold storage, etc., already been capitalized. So there is no separate revenue expenditure has been written, but technically that value has been already inclusive in the word capital expenditure. Clear? Incurred during the previous year, wholly and exclusively for the above business, would be allowed as deduction from the business income to the assessee, opting for deduction under section 35A. As land was excluded under section 35, over here, 3 assets are excluded. However, expenditure income acquisition of any land, goodwill or financial instrument. Financial instrument means if any investment has been done by that company in shares, debenture, etc., that will not form part for your expenditure. And again, goodwill and again land. These 3 are excluded for the deduction purpose. The same concept we discussed in the actual cost. If any expenditure has been done more than 10,000 other than the banking, via banking, NEFT, etc., then that expenditure cannot be part of the capital expenditure, and will not be eligible for deduction. Expenditure prior to the commencement of operation. Further, the expenditure incurred wholly and exclusively for the purpose of a specified business prior to commencement of operation would be allowed as deduction during the previous year in which the assessee commenced operation of his business. The amount incurred prior to commencement should be capitalized. That's what I was saying, that revenue, capital, etc. all need to be capitalized, and that should be allowed as deduction in the year of commencement of business. So in this capitalized value, the revenue as well as capital expenditure has been included. What are the conditions need to be satisfied? It should be a new business. It should not be a splitting up or the reconstruction of a already existence business. For the new business, the 80% value of plant and machinery should be new, not second hand. Only 20% can be old. So if there are business in which 85% plant and machineries are new and 15% is second hand, then that will be treated as a new business. But in a business where 25% value of plant and machinery is second hand and 75% is new, then that business cannot claim this deduction because that will be excluded from the definition of new business. Okay. If the deduction has been claimed under this section, then deduction cannot be claimed under section 10AA or chapter 6A deduction, nowhere. It's an income tax universal rule. No income can be taxable twice. No expenditure can be allowed twice. Set off and carry forward. This business expenditure, if has not been set off, if the loss in this business, then you can set off the loss of this business from the loss of a specified business or other same business having the same nature of business. This will be discussed in, of course, set off and carry forward of losses section. For the time being, the loss of an assessee claimed deduction under section 35AD in respect of a specified business can be set off against the profit of another specified business under section 73A, irrespective of whether the latter is eligible for deduction under section 35AD or not. For example, an assessee can therefore set off the loss of a hospital or hotel which begins to operate after 1st April 2010 and which is eligible for deduction section 35AD against the profit of the existing business of operating a hospital with 100 beds or a hotel of 2-star of category, even if the latter is not eligible for deduction of section 35AD. So if you have a hotel which is eligible for deduction section 35AD and you have a hotel which does not eligible for deduction of section 35AD, even then losses of section 35AD loss business can be claimed out of those business which do not have that section 35AD deduction is there. Illustration number 6 regarding section 35AD. Let me explain this to you. I have the okay. I do not have the question, so let me read the question first. Just a second. Okay, so question is this. Let me solve this for you. Question number 6. Illustration 6 we are discussing. So illustration 6 say that Mr. A commenced operation of setting up a warehouse facility for food grain, sugar, and edible oil. So if you recall, then this is eligible for section 35AD and sugar warehouse also eligible for section 35AD, but this is not eligible for section 35AD deduction. Clear? Now it has been given in question that land and building investment from January 22 till March 22 was 80 lakh in this business. For sugar, it's 60 lakh. And for edible oil, it's 50 lakh. Okay. Then cost of land was 50. We know that the cost of land is not eligible for reduction. So that means the building included in the above was, which was eligible for deduction, is 30, 20, and 20. Now it's saying previous year 22-23, the construction expenditure on building was 20 lakh, then 15 lakh, and 10 lakh. And the net profit from different business was 16, 14, and 31. Now it's saying calculate the deduction section 35 AD and calculate the business profit after that. So we all know that land cannot be claimed as reduction. So in this case, we can claim deduction of this and the reduction of this in the year of commencement of business. So section 35 AD, deduction under this is 50 lakhs. That means loss arise 34 lakh. In this case, reduction will be this and this. That means 35 lakh. And my loss will be 21 lakh. In this case, we cannot claim deduction. So we can claim only depreciation on the building value. So we have building for 20 and 10. So on 30 lakh, depreciation rate is 10%. So we can claim 3 lakh like this. So this is 28 lakh. And now because 35 AD businesses losses can be set off from those business do not have 35 AD deduction. So if we do aggregate, minus 50 lakh will be carry forward and 28 lakh will be my income. You can see that. As per the provision, let's move to the provision. You can say the profit chargeable under section that is 28 lakh and the loss is which is chargeable to is like 34 and 21, 55 lakh rupees losses are there, which can be allowed as reduction or not. And the other business we cannot set off this with the edible oil business because that does not fall under section 35 AD business category. If this is a section 35 AD business category, even if that does not claim reduction, then only we can set off provision reduction. Illustration 7, I prefer that you should try yourself. It's a very simple. Again, section 35 AD, you can try it yourself. If there is a problem, I will help you, of course. This is section 35 provision. Okay, illustration 8 says that if someone claimed deduction under section 35 AD and transferred that building or asset to another unit which does not have that section 35 AD deduction, then the deduction claimed by under section 35 AD will be his business income. That will be treated as deemed business income. Let's discuss this for it. Other condition that is required to claim section 35 AD deduction, audit of accounts is mandated. The deduction shall be allowed to the assessee only if the accounts of the assessee for the relevant previous year have been audited by a chartered accountant and the assessee furnish the audit report in the prescribed form, duly signed and verified by such accountant. Asset to be used for a specified business for 8 years. There's a restriction that if you claim deduction on any asset under section 35 AD, then you cannot transfer that asset for 8 years. And what if we transferred it? This is point number 3. If any asset on which a deduction section 35 AD has been claimed allowed is demolished, destroyed, sold, or transferred, etc., then the deduction which has been claimed will be your business income in the year in which that demolished, destroyed event has happened. This is a very interesting and kind of a penalty provision that if you claim deduction and then you transfer the asset before expiry of 8 years, then the amount claimed as deduction will be your business income that deemed to have been your business income. This does not take into account a case where asset as under section 35AD has been claimed is used for any purpose other than the specified business by way of a mode other than that specified. The point says, as per section 35AD 7B, if asset is used for any purpose other than the specified business during 8 years, even if you did not transfer it, you did not sell it, but stop utilizing that asset for the specified business for which you claimed the deduction, then what it says, in the year in which asset acquired, the total amount of deduction so claimed and allowed in any previous year in respect of such asset as reduced by the amount of depreciation allowable in accordance with the provision of section 32, as if no deduction had been claimed allowed under section 35AD, shall be deemed to your business income, and that value will be the actual cost in the hands of our other business. This is, the language is quite complicated, so let me make simple for you. It says, if section 35AD asset, for example, there is an asset of worth rupees 80 lakh under section 35AD, which you purchased, and you claim section 35AD deduction. This is a building. 80 lakh deduction you claim in assessment year 23-24. Now the provision says this asset should not be transferred as well as should not be used for other purpose. Should not use for other business. We have unit 1, which is section 35AD eligible. We have a unit B, which is section 35AD not eligible. So what it does, he transferred this unit for the use of this business. He transferred this building, He transferred this building from unit A to unit B. So now provision has been violated. The provision was till 8 years, you cannot do this. In the next year, assessment year 24-25, he transferred this building for unit B business, which is not eligible for section 35A. Now in assessment year 24-25, the provision says that what deduction you have claimed for that asset will be your deemed PGBP income, your deemed income under PGBP head. And how we need to calculate? If section 35AD has been applied in assessment year 23-24, if it's a normal building, then section 35AD if would have not been applied, then what we have claimed? Depreciation 10%. That means 8 lakh depreciation have been claimed. So the value will be 72 lakh rupees. So this 72 lakh will be your PGBP income and will be add your business income in assessment year 24-25. And for unit B, WDB block of asset, for example, 120 lakh. This value will be the now actual cost for the purpose of unit B block of asset. So now the block of asset value will be 192 lakh. So technically, whatever will be your deemed income under PGBP, generally that will be the actual cost in the hands of unit B. So if there is any asset which has been used under section 35AD business and claim deduction and is transferred to a unit which has not been eligible for section 35AD before expiry of 8 years, then the amount, if section 35AD has not been in place in the old unit, will be your deemed business income and the cost will be the same in the new unit. I hope it's clear. We have a question also for this. So this is an example. For this purpose, I want you should try to solve it. The same provision. There's a provision like 50 lakh asset has been there on which deduction has been claimed in assessment year 23-24 and it has been transferred to the other unit which has not been eligible. So what we need to do? We need to calculate without section 35AD, there will be only depreciation So 45 lakh will be the deemed income in the assessment year 23-24, and this 45 lakh will be the cost of the asset in the new unit WDV. Okay, you can try this, of course, after reading the question, then solve it. It's easy. If there's any problem, I will be there for you in the next session, of course. Now, section 35D, we have discussed huge provisions today, like additional depreciation, terminal depreciation, balancing charge, section 35, scientific research, section 35, AD provision. They are huge provision we have discussed today. Now, we are very simple provision like amortization of preliminary expenditure. Let me see if there is any other provision which is small, so we can discuss this today, or we will skip it for the next lecture. I don't think that we have any this kind of provision. Okay, so let me do one thing, because we discussed a lot of questions regarding the depreciation, etc. Let me take MCQ. We have led with 3 MCQ, and we will discuss the 3 MCQ, and let's see how many of you can give the correct answer now. Okay, so we are moving on to our MCQ sheet. We discussed till question number 10. This is question number 11. Now today we solve a lot of questions regarding the depreciation, additional depreciation, etc. So I believe you can answer that. So question number 11, please read it out and give me the correct answer. If the machinery is purchased on 14th October 22, but do not put to use during previous year, then at what rate depreciation will be provided on it? Question number 11. Let's see how many of you are not sleeping. How many of you are still attentive? How many of you are still sincere, still focused on the study? If somebody is asking, Vaishali is asking if 35 AD applicable to a unit, then we have a special provision for that, that if you transfer any asset from one unit to another and section 30 AD is applicable on there also, then this deeming provision will not be applicable. There will be no PGBP income like this. Okay, this provision only applicable when asset is transferred to a unit which is not covered section 35 AD. Okay, Vaishali? Okay, so somebody answer is coming very fast. Very nice. You all not sleeping. Vaishali is saying C. Tanvita is saying again C. Rajiv Kumar is C. Varsha is C. Okay. The correct answer is, of course, C. There should be a correct answer, that means nil rate, because there will be no depreciation. But because of MCQ, there are certain cases where there is not the correct answer, but we need to choose the most correct answer, most appropriate. So there will be no depreciation. We cannot claim the depreciation on it, but because there are 4 rates, so the most appropriate answer is 0%. Because if asset is not put to use, we cannot charge depreciation. Miss Sindhuja, 7.5% is wrong answer. If asset is not put to use, we cannot claim depreciation. Next, if a block of assets cease to exist on the last day of the previous year, depreciation admissible for the block of asset will be, the whole block of assets cease to exist on the last day of the previous year, depreciation admissible for the block of asset will be, Kriti is saying A, well done. The correct answer is, of course, A. If there is no block of asset, then we cannot claim depreciation. You cannot say that block of asset has been used for more than 180 days. No, under income tax, depreciation can be claimed only when their block of asset exists on the last day of the previous year. If there is no block of asset at the last day of the previous year, there will be zero depreciation. Zero depreciation. Correct? So Ms. Kriti is send the correct answer. Well done, Kriti. And now the last question is here. Opening WDV of the block of asset was 15 lakh. During the year, asset was acquired under this block on 15th June, amounting to 10 lakh. Rate of depreciation of the block is 15%. So you need to tell me the depreciation available for this previous year. Last question is this. Question number 13. You need to answer me. Then we will wind up our class and we will see each other day after tomorrow. I'll upload this MCQ with solution also. uploaded the second assignment notes. Please go and download it. If possible, take the print of all the notes. These are actually comprehensive notes. It's cover all the topic in the study almost. And if you are going through the notes and solving all the question, I personally believe, yes, you are actually in a good preparation for PGPP line. Question number 13, correct answer. I am waiting. Please give me the correct answer. Fast, students, fast. Okay, Kriti is saying D. Okay. We purchase the asset that if in question is silent whether it's put to use or not. So always assume it's put to use on the date of purchase. Let me tell you, if the question is silent about the put to use, you can assume that yes, asset is put to use on the date of purchase. Okay, because if it's not put to use and the date is different from the purchase from the put to use, then it will be given in question. So assume that it is put to use on 15 June also. Aditi is saying B. Varsha is saying D. Noor is saying D. Bhumika is saying D. So I hope you have heard me clearly that I am saying assume that asset is put to use also from 15th of June. So the correct answer will be B. We need to calculate full rate of depreciation 15% on 15 lakh plus 10 lakh. So on 25 lakh, we have to claim 15% depreciation. That will come 3,75,000. So that's all for today, and we will take our next class on the day after tomorrow. And in that class, first of all, there will be MCQ related to the topic we discussed today. So it's a request, it's a humble request from my side to all of you again, that please revise the provision. As I always say, revise the twice. That's my advice to make you wise. If you revise the topic twice, you will really gonna learn those topics very easily. And in examination also, I advise you that before examination, your all subjects should be revised at least twice. So that you can do. I personally believe there's really a very bright chances for you to clear any group, to clear any paper, to clear this chartered accountancy course. So all of you having a belated CA happy day, of course, and take care. We'll meet on now 5th of July morning 7 a.m. with our third session of PGP. Please do revise the whole notes once again, the assignment class 1 session and class 2 session. We will continue this on our 5th of July with the PGBP third session with some more new topics, with some numericals, and might be discussing about my journey again. So have a good day. Take care, everyone. Manishji.